My e-business, a complete e-commerce trade guide for cross-border transactions. My e-business is a flagship brand promoted by the Stelcore Group for vendor support services to provide an end-to-end guidance and support for legal and compliance-related issues for cross-border marketplace transactions. Vendor support services include educating merchants for applicable compliances at various stages of transactions, advisory and execution support on need basis, customized solutions as per merchants' requirements. Refer to www.myebusiness.in for details. Objectives of this webinar are to provide a complete e-commerce trade guide for cross-border marketplace transactions, to provide a basic understanding and to create awareness about the critical areas of transactions or business. Amazon offers two models to merchants to enable them to sell on the marketplace: Fulfillment by Amazon and Sell on Amazon. What is Fulfillment by Amazon? In Fulfillment by Amazon, Amazon is responsible for picking, packing, and shipping the item to the customers. The customer service and return of all Fulfillment by Amazon orders will be handled by Amazon.com. In the Fulfillment by Amazon model, a merchant is required to enter into a digital agreement with Amazon, agreeing on the terms and conditions set forth therein to sell on the marketplace. The merchant would need to bulk ship his items to USA. This can be done through an importer on record who can be the merchant's own logistics partner or Amazon's partner carrier. The importer on record will deliver the goods to the Amazon fulfillment centers in USA. When the customer places an order for merchant's good on the marketplace, Amazon will pick, pack, and ship the goods directly to the customer from its fulfillment center. Customers will be required to make the payment directly to Amazon in US dollars at the time of placing the order. Amazon will fortnightly transfer the amount in Indian rupees into the merchant's account after deducting its commission. Merchants will be required to comply with the sales tax authority depending on the state where the goods are stored in. Sell on Amazon. In the SOA model, the inventory will reside in the seller's warehouse in India. And when a customer places an order, the item will be shipped from India to the country where the customer resides. In the SOA model, a merchant will register with Amazon and list his products by entering into a digital agreement. The inventory will reside in the merchant's warehouse in India. When a customer chooses the merchant's product, places an order on the marketplace and makes a payment, the merchant will receive the order notification. Merchant will need to pack and ship the product to the customer in USA directly using its own logistics tie-up or using Amazon's partner carrier. Customers will be required to make the payment directly to Amazon in US dollars at the time of placing the order. Amazon will fortnightly transfer the amount in Indian rupees into the merchant's account after deducting its commission. In order to give you a basic understanding of the complete transaction structure, routing of payment, etc., we have dealt with the following steps in this webinar: prerequisites of exporting goods from India, customs and sales tax compliances, foreign exchange and RBI related compliances, presentation and disclosure in financial statements for accounting, inventory, and taxation. Prerequisites of exporting goods from India. What is an import-export code and how to obtain it? The IEC is a mandatory requirement to export, import from or to India. It is issued by the Directorate General of Foreign Trade. Application of IEC can be made online or offline. Person or entity applying for the IEC must have a valid PAN. What is an authorized dealer code and how to obtain that? Authorized dealer code is a unique number issued to every authorized dealer bank. It is the same for all the customers of an AD bank. An exporter simply needs to request AD bank to disclose this code to them. An AD code is provided by the bank where the exporter's firm or company hold the current account. What is the procedure to link IEC with AD code for export? Linking is done after the IEC is issued. AD bank can intimate the AD code to the customs authority by a letter. How can a merchant export from multiple ports of India, by air or by sea? Commercial clearance of a shipment from any given port cannot be done until the AD code is registered at that port. Linking of the IEC and AD code is therefore compulsory before exporting via any medium like sea, air or land border, without which the customs will not accept the cargo. What are the consequences of non-compliances with regulatory authorities for IEC and AD code? Obtaining IEC and AD code are one of the prerequisites to enable an exporter or importer to export or import from or to India. Without an IEC and AD code, no export or import can take place from or to India. What are the documents required for exporting goods from India? A bill of lading, airway bill, commercial invoice, packing list, and shipping bill or a bill of export are the necessary items to export goods from India. Are exporters required to have specific bank account to receive export proceeds? Yes, they should have a current account with an AD bank. Customs and sales tax compliances. Who is the importer on record and what is its role? An importer on record can be the owner, purchaser, his or her authorized regular employee, or the licensed custom broker designated by the owner, purchaser, or consignee. An importer on record assists in filing the necessary customs entries, arranges payments of duties owed, takes steps to release goods from the custody of the U.S. Customs and Border Protection. When does the import duty liability arise, and who is liable to pay? Import duty is levied at the time of import and is payable immediately by the importer on record. Does the merchant need to pay full duty in US for items shipped on consignment basis? Yes, the merchant needs to pay full duty. In the FBA model, since the product is not sold to the customer directly, on whose name should the merchant draw the invoice? Invoices will need to be raised in the name of the importer on record. Will the invoice be different from the sales invoice? Yes. The invoice raised in the name of the importer on record is for the customs authority purposes only. It differs from the sales invoice, which is issued by Amazon for the sales of good to the customer. What is a fulfillment center and what is its role? A fulfillment center is an Amazon warehouse where a merchant's goods are stored under the FBA model. Once an order is placed by a customer, Amazon packs items stored in its fulfillment center and delivers it to the customer directly. In addition to the import duty, what are the other taxes a merchant is liable to pay in the US? Apart from the import duty, a merchant will be liable to pay the sales tax. When does sales tax liability arise, and what are the related compliances? A merchant's sales tax liability arises only if he has some physical presence, also known as nexus, within the taxing state. Physical presence includes merchant presence himself or through an agent or affiliate that is establishing and maintaining an in-state market for the merchant or third-party warehouses. United States does not impose a national level sales tax. Sales tax varies from state to state. The laws, rules and procedures with respect to sales tax are not uniform among the state's jurisdictions. Issues such as tax-based calculations, taxability of specific items and tax rates varies considerably amongst the jurisdictions. A merchant would therefore be required to obtain a sales tax permit and register with the sales tax authority of each state to which it has nexus. In the FBA model, since goods are stored in the Amazon's fulfillment centers, sales tax liability of the merchant would arise in each state his goods are warehoused. What are the consequences for non-compliances with regulatory authorities? Sales tax is payable to the state's sales tax authority. Non-compliance with sales tax requirements is punishable. Penalty rates vary among the states. Non-compliance may also amount to the merchant being blocked by Amazon from further selling on the marketplace. Authorities may also blacklist the merchant and restrict it from selling in the US completely. Will merchants need to pay VAT in India for exported goods? No VAT is payable on export of goods from India. Is shipping products as samples by courier from India to US legal? The DGFT permits export of bona fide trade and technical samples of freely exportable items without any limit. The consignment having free samples should be of zero value. Export of samples is not allowed or illegal if there is any transfer of foreign exchange against shipment exported as samples. An application for export of samples or exhibits which are restricted for export may be made to DGFT in Form ANF2Q. Can merchants claim export benefits on e-commerce items shipped as sample? If the consignment contains free samples having zero value, no export benefit can be claimed. Export benefits under various export benefit schemes are available only on such shipments or consignments where the goods are of some ascertained value. Foreign exchange and RBI related compliances. How does Amazon collect payments from customers and remit it to the merchant? When a customer places an order on the marketplace, his account, debit or credit as the case may be, is charged in USD by Amazon. Amazon deducts its commission and remits INR into the merchant's Indian bank account every fortnight. How can a merchant ensure proper accounting in accordance with the provisions of FEMA for liquidation of invoice, unsold inventory, and destruction or return of goods? For goods being sold on discount, the Master Circular on Export of Goods and Services permits an AD bank, upon satisfaction of genuineness of request, to approve reduction in the amount received by the exporter not exceeding 25% after a bill has been negotiated. Where an exporter has been in the export business for more than 3 years, the AD bank may allow a reduction in the invoice value without any percentage ceiling, provided the export outstanding does not exceed 5% of the annual average realization during the preceding 3 financial years. As to liquidation of invoice on account of unsold inventory or goods destroyed, the AD bank can be satisfied as to FEMA accounting compliances by linking the list of goods exported against the inward remittances. Under the MFN model, if goods are returned to the merchant as unsold, the merchant would need to explain the reason for such return to the AD bank. FEMA regulations require the AD banks to verify the bona fide of such transactions. What are the documents needed? In order to ensure proper FEMA accounting of unsold, destroyed inventory loss, the merchant must provide an application letter for processing export documents, the invoice issued by the exporter to the consignee attested by customs, an airway bill number or dispatch document, the export declaration form, a copy of FIRC where the amount received in the account is in foreign currency for the amount received and realized, and a proof of destruction of inventory as the case may be. Can merchants receive export revenue in foreign currency? Is there an RBI limit? Yes, merchants can receive export revenue by opening an EEFC account with an AD bank. An EEFC account is a current account facility provided to the foreign exchange earners, including exporters. There is no ceiling from RBI for export revenue in foreign currency. How can merchants prove the INR money received in account is against export? Merchants can present the following documents: invoice issued by the merchant to the consignee attested by customs, airway bill number or dispatch document, and an export declaration form. If export revenue is received in INR by the merchant, can he still claim export benefits? To claim export benefits, a foreign inward remittance certificate must be issued to the exporter. Thus, if FIRC is issued to the merchant, he can claim export benefits whether he receives INR or foreign currency in his bank account. Do merchants need to pay for importing unsold inventory back into India? If the merchant is able to satisfy the customs authority that the goods imported are unsold inventory, he would not have to pay for importing unsold inventory back into India. However, if he is unable to satisfy the customs authority that the goods imported are unsold inventory, seller would need to pay for such import. Can merchants claim duty drawback from US on unsold inventory? What is the process? Merchants can take duty drawback from US on unsold inventory if they are able to satisfy the customs authority with proper documentation. The process of claiming duty drawbacks from US depends from case to case. We would be happy to guide you through this process. Presentation and disclosure in financial statements for accounting, inventory, and taxation. How can merchants value unsold inventory at US? Valuation of inventory is governed by Accounting Standard 2, issued by the Institute of Chartered Accountants of India. Inventory is usually valued at net realizable value on an item-by-item basis. Net realizable value is the realizable value of inventory at any given point of time. The financial statements should disclose the accounting policies adopted in measuring inventories, including the cost formula used, and the total carrying amount of inventories and its classification appropriate to the merchant's enterprise. Is the merchant eligible for export benefits in the various schemes in India? Export benefit schemes are issued in accordance with the foreign trade policy. Generally, all export benefit schemes are available to exporters. However, the applicability of the schemes would depend on the nature of goods being exported. What is double taxation avoidance agreement? What is the arrangement between India and US under DTAA for income tax purpose? India has signed DTAAs with many countries. The aim is to avoid double taxation of the same income. The treaty can be bilateral, that is, apply to only two countries in question, or multilateral. DTAAs benefit institutions and individuals who earn in countries other than their country of residence, provided such an agreement exists between their country of residence and the country or countries where their income sources are. The benefits of the DTAA are lower withholding tax, that is, tax deducted at source, exemption from tax, and credits for taxes paid on the doubly taxed income that can be encashed at a later date. What are the documents needed to prove that Amazon.com does not have permanent establishment in India? A No Permanent Establishment Certificate or No PE certificate issued by Amazon.com shall be sufficient to prove that Amazon.com does not have a permanent establishment in India. Therefore, as long as the condition which determines that Amazon.com is not having PE in India, such certificate may be taken as a validity certificate to determine the liability under Section 195 of the Income Tax Act 1961 with respect to withholding tax. Where and how much income tax does the merchant have to pay for the income earned from the transaction? Under the Indo-US DTAA, the profits of an enterprise of a contracting state, that is India, are taxable only in India unless the enterprise carries on business in other contracting state, that is US, through a permanent establishment situated therein. The broad definition of a permanent establishment has been explained in the FAQ for exports. Briefly, a permanent establishment means a fixed place of business through which the business of an enterprise is wholly or partly carried on. If an enterprise carries on business in US through a permanent establishment, its profits may be taxed in US, but only so much of them is attributable to permanent establishment, sale of goods and merchandise in US of the same or similar kind as those sold through the permanent establishment, or other business activities carried on in other state of the same or similar kind as those effected through that permanent establishment. This webinar contains general information provided by SMSPL. The legal information contained in this webinar is not advice and should not be treated as such, and is provided without any representation or warranties, express or implied. Please contact us at 022-3203-0420 or 9196-994-18777 or mail at support@myebusiness.in for any further support for services mentioned in this webinar.